just before we go on the graphs and I show you exactly how you can master the concept of imbalance, I made a small slide that will give you all the information about what it is, how you can use it in trading to become a professional at seeing them, using the right ones, not falling into the basic traps, and making money. And we'll find some on the graph just after and try to find trades together. All the content I'm giving is fully free. I have nothing to sell. And if you not watch this video until the end, that means you do not deserve the content in it, because it's fully for free and it helped me to make several times 6 figures. So what is an imbalance? It is the footprint that big money leaves on the charts. So basically, there are 2 types of people on the charts. You have the retail traders like you and me, and we have the institutions. Institutions will basically have to enter a lot of orders at the same time. And when they do, we can see it on the market. So what is an imbalance? Basically, it's a zone where the price has moved a lot and very fast. Basically, it shows that there is no equal force between buyers and sellers. So basically, one side completely overpowered the other one. A balance is a fair market between buyers and sellers, meaning that the price is moving calmly and you can see that both of the sides of orders get filled, meaning that you got some buyers, they enter, you got some sellers, they enter, you got some buyers, they enter, you got some sellers, they enter. There's the same pressure, there's the same power. Imbalance is basically when you have all the orders going in one side and there's no one on the other side. And the gap between those two is called an imbalance. And it's very useful, and you'll see why, because the price is attracted to those after imbalance, significant imbalance is created. So too many orders, not enough fills. You can see that here I made an example about how the price works. Every price on Bitcoin, for example, has a queue of buy and sell orders, meaning that everyone wants to pass their orders and they need to wait. And sometimes there is too much power on one side. So the price is executed on every price possible, making the price go up. Everyone wants to get executed, but there's no one on the other side countering that power. And you need to understand one thing. The market is hating empty spaces. If the price has been skipping a part of the price, the market will come back to fill it in most cases. So one candle on a higher time frame is basically a story on a low time frame. So on a high time frame here, you can see one big bullish candle, meaning there is only a bullish price. And if you look at that in your analysis, you cannot understand what's going on. There is a gap, and one part of the price of the bullish candle was never counted. So the price was like skipped. This will leave a gap between the first and the third candle, and that gap is your imbalance area. You need to notice where it is and use it wisely. So you have different kind of imbalances, and this is why I'm going to give you the 3 candle rule. Okay, first thing, you need to measure the gap. Okay, this is the first thing. We're going to do it directly on the graph just after. Second thing, you need a strong middle. Okay, there should be momentum. That means that you should not have a candle in the middle with a big wick. Okay, it needs to be full-bodied, big-bodied, and this shows that some part of the price was skipped. Although there's one important thing that a lot of people miss: one of the first or the second candle can be red. This is important because some people only think it can be a bullish price. Now, we also need to judge the power of our imbalance. Why? Because the bigger the gap, the more there is power in it, the bigger the momentum, and the most interesting it will be. So as a trader, you need to understand we're going to focus on strongest and strong. We're going to leave weak and balance. We want to target huge gaps, and if not, we want to target at least clear gaps. We're going to leave tiny gaps and no gaps for now, as this is a beginner course. So this is what it looks like. And today we're going to focus on the strongest, the huge gaps, so you're able to understand how it works. So what is the price, and exactly how does it move when an imbalance occurs? So the price is basically what you can see on a graph. You see on a graph, and the area where we are right now shows you the price of the asset. So basically, the price always has key levels. And if there is something irregular, like an imbalance area, a gap, that means the price was not filled. That means a lot of people have been skipping that price. And it's a natural pullback that will occur to fill that area, meaning that when there is a big push from smart money, the big orders, the big players will put so much liquidity, will push with so many orders, so many lots, that the price obviously will react aggressively and leave the imbalance behind. So what happens next is the price snaps back and there's a kind of force filling down the orders. Okay, it's trying to rebalance the book of orders. So if you have an imbalance, a clear imbalance, strong imbalance on your price, there is a very big chance that the price will go back to fill those orders before going to the natural area, so the area where the institutional orders was. Okay, institutions are always right, and we'll do another video if you want. By the way, you probably will have another video in the description of a full course if you want to go deeper in the subject of trading and become a professional and profitable trader. But now today we need to focus on that 1, 2, 3. Smart money pushes, price snaps back, and then everyone buys again, the price goes back up. It's pretty simple, and we'll try to understand how to take bearish moves and bullish moves with this concept just after. So what you need to understand is the red box here. I gave an example. This is an old graph, but you can see there is a very wide gap left. Okay, there is a wide gap, meaning you've got your first candle on the left. This is where there's the red box. Then you've got the second one, and then the third one. We know that the price will come back up. Okay, the price is returning to the red box before going back to the bearish side. So there is a bearish movement with institutional orders. The prices, okay, some orders need to be filled. The price comes back, it fills the orders, and it goes back in the same way institutionals wanted the price to go, and they are always okay. So basically the gap, you must see it like a magnet. When you've got a magnet in your hand, the price is exactly like that. It's going to be attracted to the magnet. If you understand that, you understand everything. I created a checklist for you guys so you understand exactly how to handle order. So you exactly understand how to handle your imbalance. So basically 3 candles, 1 gap. Bigger gap, the stronger the imbalance. So the most interesting for you, because there is no truth in trading. There is only indications of what the price will do. So you need to follow strong indications, and the bigger the gap, the stronger the indication. Order block is the entry. So the imbalance, basically your entry must be on the order block, as you can see. So the first candle that you've got on top here is the order block. That's where the red box is, and this is what you need to have as an entry. So the middle candle, the second one, the big red one here on the left, must be very strong, and if you can, we have no lines here. Important. The price fills the gap, so you need to expect a pullback. So pullback is the price going back to fill the orders before going back in the right sense. And what you need to understand is also the last thing I wrote. Trade with smart money. You need to enter with the big players. Never enter against them, because you will get destroyed. The big players want to sell. Do not look for buys. Do not try, if you're a beginner, to get the pullback. You can trade the pullback, and I'll make a course about trading the pullback. But if you just begin and you do not know how to trade, or you're not profitable yet, try to only find a few trades a week. Just try to find your big imbalance. Try to trade with the big players. Try to respect that simple thing and respect your risk. You will take more time than you think to become profitable, and you need to have this checklist in your mind, and everything will be okay. On TradingView.com on the gold, and we're going to be trying to find an example of imbalance areas that are worth trading. So what I'm going to do is change the time frame here. A candle is 4 hours, but I told you in the course before, this is higher time frames, and you will just see very less than if you put a lower time frame, like a 15-minute time frame. So here, as you can see, we have a 15-minute time frame, and what we can do is basically try to look for nice imbalance areas, for example. And at the end of this video, I will give you an indicator if you don't want to look for those areas by yourself, but try to not skip the important part, which is now. For example, here we have a very nice first, second, and third candle. We have a lot of momentum, and if we understand how this works, we understand that our imbalance area is between this and this. So this is where the price will probably come back and fill before it goes back to our institutional orders. So what we want to do is set up our trades and try to put a long position around. Okay, what we're gonna do then is try to understand where the last lows. So basically this is it, and we're gonna try to put our stop loss under the last low. So here, for example, okay, then we will try to reach for at least 2R, meaning we risk $1 to get 2. If you want to do more, you can do more, but just to try to train and see if this works for you. So what you want to do, you will never have the perfect entry, but I prefer to have an entry and put a stop loss which is far enough and respecting key levels to be able to have my trades taken. Why? Because otherwise a lot of people try to be as precise on their entry as possible at the beginning, and they miss a lot of trades. And this is more frustrating, and then you'll try to look for very low quality entry. So try to understand that it's never going to be exactly perfect. But here, around my entry, okay, I'm waiting for the price to get me. I'm trying to reach for a risk reward of 2, and we try to put stop loss first, okay? Never start by the take profit, start by the stop loss, and try to put your stop loss under a low, okay? So this is around our last low, and we want to put our stop loss on, okay? And we want to try to reach a risk reward of 2. So we're gonna take another example, but as you can see, obviously here it would have been perfect. So what first candle, second candle, third candle, imbalance area, the price is like a magnet attracted to this area. We enter around here, okay? Here we have a little bit of drawdown, and then boom, the price goes back. So this is what you want to aim for. Here we have another example. We have our first candle, our second candle. So this one is very interesting. There's a big momentum, and the third candle. So we're not trying to follow the move. We're just trying to wait for a pullback. So basically the pullback is around this area. We're gonna wait. We're gonna take a long position basically around here, so we can set our take profit after that. And our last low basically is around there. So those are all the lows. So we want to put a stop loss just under, and then try to reach for a risk reward of 2. And as you can see, still working. So what you really need is to have 3 candles to check what is the power of the second candle. Try to look for a large gap, wait for a clean pullback, and you can enter. Always start by setting your stop loss under the last lows, and try to then put a take profit, which is 2 times at least more important than your stop loss. Try to do this strategy in demo. Try to do it as much as you can. Try to handle your psychology using this strategy. And if it works, if you really have results, then and only then start to trade with real money. I also told you that I will give you an indicator to stop wasting time finding your imbalance areas. I suppose that you watched the video correctly. If you do not, please do not use that indicator. It will make you lose money. Why? Because you will not understand what is a great and uninteresting imbalance. So you can use this one, for example, which is called imbalance detector. And what you can see here is that it's going to put areas where you have the bullish ones in blue and the bearish ones in red. So you can directly see them on the graph, and you can directly understand where they are. And by the way, look, I didn't use that indicator, but it shows that our entry was perfect here. As you can see here, they detected that there was a great imbalance, and this is where we set our entry, and boom, the trade was perfect. So if you want to understand more how trading works, if you have questions, if there's anything in your head which is not clear, please put it in the comments. I'm here to answer, and I'm not creating content to sell anything to anyone. And by the way, if you want to support my work, subscribe to the channel. It's free, and there's a lot of videos. In the description of this video, you will find another course which is much longer on different concepts that can really help. And you will also find my personal Telegram channel where I share all my trades day after day. And if you really want to get to a new point, to a new level, and have me daily with you taking trades, it's fully for free. You can click on the link and join the channel.